Before we begin, we must provide a disclaimer that the following information provided is not investment advice. Our methods, teaching, and content for educational purposes only. Okay, with that being said, let's get on with this. So this is Hoth. This is more of a day trade. And just to give you guys an understanding of what my plan here was today, right now I am building out the options course based upon prints, based upon my options. This is a course and a strategy that I created years ago and have been curating for years, and can say that definitely in the last 2-3 months we've been basically 100%. Now that's not always the case. Not all trades are always going to work out. That's why nothing is 100%, and we take trades anything above 70%. But when things are going correctly, you get winners and you can get into streaks, and that's what happens. So as I'm building out the courses, which will be sometime in February, is when those will become available. It will most likely be over a period of 2 weeks, Tuesday to Thursday, probably morning classes, and I'll be able to then teach you guys exactly how I'm putting together the options course. But in the meantime, as I'm preparing that, we did have an intro options class, just giving you the basics of what we're doing. We did a case study and so forth. So I know some of you have already started taking these calls, whether it's swinging shares or taking options. And today's session was really to find out what questions you have in the offset, any questions you have about how the prints work, how they can be attributed into the play. Because one of the major things here is, if you're not a day trader, and most of you are not, and day trading takes many, many years to do, the beauty is, yes, you have access to a lot of students who are day traders, who have been with me for some years. And as long as it's a pertinent stock that we're seeing all this acquiring, or could be the other way. It could be, they could be gathering shares to go short. It could be either one, whichever option. But for us, everything has been acquiring for long. And so the beauty is, the major stocks, as we know, IONQ, ACHR, OKLO, there's been a list of some nice stocks. If they've got that much buying, they're going to be on our radar as day traders. We are going to be watching that every day, Monday to Friday when we trade. One, because a lot of us will have active positions in the stock, and two, we base even day trading off those prints. So both ways, it keeps our eyes focused. So the beauty is that you have access all the time to updated prints. You can always ask people in the room as well to keep you updated as long as they have time and ability to. But that is basically the largest part of this option strategy, is not only knowing and waiting for those types of large prints and understanding how that acquiring is either small, mid, or long term. It's the key, and revolves completely around those prints. So one of the things I'll say for some of you who don't have access to a platform or who do not have a day trading account is, most certainly make sure you are active in the room speaking. Speak to people, let them know if there's any stocks that you have interest, and whoever's available might be able to keep an eye on it on one of their screens. Also, it will tell you that if you're finding a stock and you saw something you like and nobody else is speaking on it, then it doesn't fit into our category. It does not fit into what we need to see in order to create a play, because everything we do starts with us seeing a company out of nowhere, seeing a lot of new accumulation, new volume, and seeing that there is the new presence of market makers, and that this company is now getting new exposure. So that becomes key. So I just wanted to know from a few of you now today, let's go back and forth. This is definitely where I'd like to hear you guys come on, speak with me, and ask me questions. Ask me about your swings, your options, and any concerns you're having or anything that you're not understanding. So before you come on, just type it in the chat that you'd like to ask a question, or raise your hand, so that way Miller knows and he can have you come in the room and speak directly with me. But just as you're thinking about that, if you guys remember earlier, I said in OKLO, and we are talking somewhere around about here, as I was watching the way it was trading above 30, 30 being a huge psychological level, and I could notice that, and I said it was trading quite smoothly given it's 30. Now, my price target has always been 35. And why has that been 35? Let's have a look quickly. If we hit over here, and now we're going to be looking at the daily, we can see that the consolidation is between 28 and 18. So if they're building between 28 and 18, which is a $10 range, would they be building that much just for it to go up to $32? What do you guys think? Type that in. Active trading, people. If you are not typing in, if you are not participating, I will repeat this. Your ability to attain and retain the information is somewhere like 17 times less. It's proven. Anything that you're thinking is just a thought. It's the action of being that solidifies the intent. Make note of that. So the more that you participate in the room, the more that you speak to me in the chats, the more that you're willing to come on and speak on the mic, all you're doing is 17x's your ability to retain that information. Because at the end of the day, what do we want to do? Just like everything else in life, we want to create a habit, and over time, it starts becoming muscle memory. So remember that. Okay, so there we are. No, it wouldn't make any sense. Why would you acquire between 18 and 28, which is a $10 range, and you're talking from early, this would be early mid-October, so October 15th, or let's say around mid-October, we are now in January. Why would they do that for 7, 8, 9 weeks in order just to go up $2? So that's absolutely not. Now, why do you think, now remember, calculated move. So the calculated move is 10 to 28. If you look here, 10 to 20, $18. So 18, if you did start calculating and said, well, 10 to 20, 18 to 28, Doug, is $20. So if we did a calculation of 18 to 20 and added $20 on that, what would our price target be from 18? So again, I'm sorry if it was a bit confusing. We basically went from $10. And why do I say 10? Because I'm looking at when the huge volume came in. That's the start of the actual move. Why is that? This right here could have been lots of acquiring slowly throughout summer. Low volume. Acquire all the shares that you need. Now we're getting ready to release from this position above 10. So as you can see, between 5 and 10, $5 range for many months. We can see in the volume was far more than it used to be. So once they had finished this acquiring here over summer on very low volume, very similar to years back how we used to see Palantir, Uber, a lot of these companies slowly acquire without anybody knowing, but we could see it. And then it comes all the way to mid-October, and now the big volume. Well, if you've been acquiring and your average has been this much, 3 million a day for the whole of summer, you're going to need a significant amount of volume in order to really release this whole area of acquiring. So the release started over 10. And we can see that this huge momentum of volume maintained itself all the way to 28. Then on this portion, it needed to build. And it has built with humongous volume. It has taken shape. It has shown you the consolidation. The volume has authenticated what their strategy in phase 2 of the long term was. And then we can see the volume here now starts coming back in again. So if you're coming off 18 and you want to add a calculated $20 move, you're at 38. Absolutely, Kevin. Thank you. Now, why do you think I am not, even though we know 38 is the target, which would most likely mean that 40 is going to be in play, why am I saying 35 and not straight to 38? Who can answer that? Yep, agreed. That's partial. Partial. I want you to think a bit more than psych level. Come on, that's basic. So 35 is a psych level. I absolutely agree. But I want you to understand something. If we can see the clearness in their strategy, and we know 38 to 40 is most highly indicative of where they want to take it for it to make sense for the amount of body of work they did, we know that 35 has a good chance of not really being too much of a pain, of not really thwarting the move or holding it up. So, what do I really want to see at 35? Do I want to see two things? One, when we get to 35, what are they going to do at that psych level? Are they going to prepare us for the 40? Are they going to use 35 to extend the period it takes for it to move forward? Are we going to see certain market makers come out of their large positions? Because if we see a lot of market makers decide to come out of their positions at 35, because remember, although the calculated move was from 10 to 28, that does not mean it's one market maker. There are multiple market makers. There has been loads of buying, loads of market makers are all present in this stock. That does not mean they all have the same intention. They do not all have the same price target. Some price targets might be $5, $10, $15. Some of it, or a lot of it, will be just long-term holding because of the potential of this industry. And we know one thing: nuclear power is the future. Do we agree? Do we agree that nuclear power is going to be required to power all these AI chips? So do you think even if this company today has low revenue, has no profit, might not have any revenue, might be a startup, is all this buying a pump and dump, or is it prepared for what the future holds? What do you guys think? Do you think when Elon's Tesla was losing and burning through cash, the billions by the month, the people who invested early on, were they doing it because of what Tesla was showing them at the present moment, or because of what they had a considerable belief of what the future would hold? So when you look at these companies and you're looking at all this buying and acquiring, and when you see they've strategized for months, do you think they did that for a pump and dump, or did they do that because once we understand our 7 point company analysis and we've gone through the entire protocol that I will teach you, do we then come to the understanding on certain times that this is going to be a quick move up and down, or this is a start and the acquiring and the building and the foundation for what's to come in the future for that segment or even that stock? Because what that's going to allow you to do is to better relate to how you're seeing the acquiring, how you're seeing the consistency in volume day in, day out. And you're not going to be so one dimensional and say, this is my price target. Because here's the reality: is anybody shocked that IONQ is all the way up in the 50s? Is anybody shocked? How long have we been watching and tracking the ridiculous amounts of buying in IONQ and quantum computing? Has that been going on for since basically market making strategies opened? It's been going on since market making strategies has opened, basically, right? Because is quantum computing going to be part of the future? Can it figure out and calculate faster than what we have now? So do you think that swinging from, if you got in shares when I first started calling all this action out months ago, and you were swinging shares, are you going to get out of your complete positions once you're up a dramatic amount, or is it worthwhile staying invested a little? And now remember, this is not me giving you guys investment advice. This is me just speaking on all the different variables and factors that we should consider. Do you think robotic vehicles can happen? Robotic taxis, robotic military equipment? Do you guys think that that's going to be a possibility? So do you think ACHR is a stock for the future? Knowing that it signed an agreement with United Airlines, knowing that it's creating the first of the military robotic vehicles scheduled to be delivered at the end of this year. Would you be excited by that? Oh, there you go, Sid. Thank you very much. NVIDIA just emphasized that in their keynote today as well. Do you mind, Sid, do you mean in terms of robotic cars? Or do you mean quantum? Or do you just mean in general, the conversation surrounding these large tech is that future of quantum, of nuclear, of robotic vehicles? Is that what you meant as in the intent? I'd assume. Because the reality is this. Do I need to even listen to NVIDIA to know that in their corporate offices, in their R&D rooms, do you think they're talking about quantum computing, robotic cars, nuclear power? Do you think that's all going on, or is that just us seeing it, or is that them not only talking about it but taking their positions for the future? Would any of you be shocked if Jeff Bezos, Elon Musk, or one of these people 10 years from now said, I actually bought 5 million shares of IONQ at 10? Would you be shocked? Does it happen all the time? So, what is the point that I'm trying to make here? One thing that I want to teach you all about the stock market and about business and companies in general, and it's really interesting because in our weekly market making strategies meeting, me, David, and Millen were just talking about this yesterday, and I was saying the one thing that I can also provide, which maybe I took a bit for granted, is I've been a businessman for over 20 years. I have so many lessons that I've learned. I've been in so many industries. I can relate that back to all of you. I can help you with how that all looks too, understanding how companies' financials work, understanding how P&Ls, balance sheets, cash flows, understanding all of that aspects, understanding C-suite leadership. I can teach you all of that stuff, and it's going to be part of the options. And why is that important? One of the biggest things that I love doing out of fun, and I've been doing this for years, and I love it, and I want you all to do this to show you how far along you are and you're going to be. And choosing market making strategies was such a smart choice by you, because every time I go on the Yahoos, every time I go on these apps and these stock companies and so forth, what do you think retail is saying as we've been watching OKLO and IONQ? Every 50 cents it goes up, someone expects it to come crashing back down. I sit there and I laugh at all these comments from retail, because what do they not know that we know? What do they not have access to that we do? The only thing they access every 48 hours is crying away because they got in and they lost. They got in, it went. I got in here at $2 and I sold at $2.30 because they don't have prints. They don't know why they're in a stock. They just know the stock is moving in a direction they like. Is that a high percentage? Because other people like it and because it's moving long that we should get into a stock? Absolutely not. We're not retail. We follow market makers. Type that in there. Even in our option strategy, type it in. We follow market makers. That's the only thing we do. So when we follow the market makers, that gives us our timing, that gives us the moment, that the people that can actually move and control the outcome and destiny of a stock are now in. Your driver is now present. It doesn't matter how shiny the car is. If the car doesn't have a driver, it's going nowhere. Now, as we follow or sit in the passenger seat, by the way, just to be a bit more funny, I look at it as though I'm sitting in the back seat and I'm being driven like Miss Daisy by the market makers. Because whose job's easier, ours or theirs? Our job. So why do we make it so hard? Ask yourselves that. We get the free ride, as David just correctly put it. They're over here putting billions and millions of dollars on the line and have to create certain outcomes. Our job is just to spot what they need to do and follow it. Now, the beauty about this option strategy that you guys will see is I don't want to give you just one prone, one dimensional, here's the buying, here's your exits. I want to teach you how you can expand upon initial entry or follow. And now the strategy will speak to you. See, the beauty about the prints, once you learn it, and I know it takes a long time, and I have obviously mastered how to read prints, is that the prints is the dialogue. The prints is the story. The prints is the truth. Once you get to read it, you start understanding, okay, this is short term. This might be just a short term play. Now this has midterm and long term possibilities. The second that we start accounting and go from short term, midterm, long term, what should we be thinking about a certain portion of our position? Come on now. It begins with I. Again, I'm going to repeat that for you again. If the prints are the dialogue and they're speaking to us, and as we go on daily and weekly, like in OKLO, IONQ, so I'm just going to show you, look, we got OKLO, IONQ. I mean, look at IONQ. We started with our short-term thesis. I then propelled it to a midterm and a long-term thesis. The buying has been absolutely exceptional since September 30th. This was at about 6 million shares a day average. It then had a day of 42, and it's basically been averaging about 500% more volume every single day since September 30th. So if we came in and our first analysis was beautiful, we see this buying, it's short term. Then we see that the volume is only increasing and the volume patterns are showing far more exposure, even as it's going up so many high percentages. And now we've created the short term, the midterm, and the long term. Then what should you be thinking about a percentage of your position? Investment. Do you guys want to miss out on the possibilities that you could have a $5 entry and now it's at $100? Would you all like that? For instance, we were talking about this at 10. It's at 50. This happened in just over 2 months. Can someone tell me what is the return on your investment if you bought it at $10 when I told you it's acquiring and you sold it at 50? Give me some basic math. What was your return on your investment in 2 months? Type it in. 400%. It's all right, Kevin. 400%. Spot on. Who likes 400% on cash return? Who's okay with that in 2 months? Now, who knows what the return on the options position would be at $50? Let's just say, let's take my strike for January. My strike for January is $32. So I only have 15% on my position left in IONQ. You guys know I sold a majority at 45. My return currently, and I'm just looking at it for interest, is 1900%. Is that a difference to 400? And don't get it wrong, 400% is absolutely beautiful. But I might have invested the same amount of money as you because I'm buying calls, yet my return is 1900%. Who likes that in an options method using that as the instrument? But the reality is this: a great return on your money out there, even in the S&P, even for hedge funds, what's the percentage that most people are more than happy to receive on a yearly basis? You're dreaming 12 to 15. We'd love to make 12 to 15%. It's 7 to 10. 7 to 10. Tim, you're right. GP 13's high. 7 to 10 is what you're usually running for. Well, in 2 months, you can make 400 to 1900%. But if you look at it, you got to look at these charts and say, this is absolutely just showing a new level of valuation. See, when you start seeing that, and when you see exceptional buying for days and it's just taking it to new heights, and you're saying it's got to come back down, they're basically telling you this is ready to move. The valuation of the company is increasing. There is far more hope and the future is closer. That's what it's basically telling you. So when we look at how do we formulate our options and how do we formulate our calls, there's going to be certain times. Now, for instance, if you had options, you've got time decay. So do you think it's possible that you can start with options, see that it's gone from small term, mid-term, long term, and say to yourself, I need to convert 10% into shares and I'm going to hold it as an investment? Do you have that possibility? Yeah, of course you can. So there's many strategies you can employ because of the prints. See, even this right here looks great, but it's a chart. We knew what the chart was going to look like before it even happened. Who likes that? Who likes to understand print so well, which we do, that you can draw that chart's future? Who's ahead? Who's ahead now? We are ahead. So that was just a bit of basic that I wanted to talk to you guys on. And that's why with OKLO, I want to know, is 35 going to start giving me an understanding of a further output, of further interest? Because I'm not just looking at this as a short term, because it clearly isn't. Would you guys say we're already in long-term territory with OKLO? Who would say we are in long-term territory? So, okay, let me give you guys an example. If you bought into this at $15 and this you had a price target of 35, are you selling all your shares at 35 just because that's your price target? Why? Because we are seeing short term, mid term, long term. When you get in your head to long term prints, that's when you should start saying, I need to make sure that my 7-point analysis, which I will teach you, is strengthened and I'm following it because this looks like an industry that's going to be part of our future need. We are right now on the cusp of precipitous of seeing new market segments come to life. 10 years from now, 5 years from now, do you think you guys are going to look back and tell someone, oh, back in 2024, we were trading IONQ, ACHR, OKLO, and they were like $5 and $10, and we knew then. And then 5 years from now, you're going to sit back and say, I owned it at $5 and it's at 300. And the whole world is full of nuclear plants and robo taxis. If you take this seriously, if you put your time and effort behind it, you are well ahead of change. Type that in the room. Who likes to be ahead of change? Say, I like to know the print so I can be ahead of the change. Type it in the room. I want you guys to type that. Beautiful. Beautiful. Thank you. Right. Now, who wants to come on and ask me questions? This is your time. I want you guys to be really comfortable with where we are so far before we get into the class, which is just I can't even I really I know I've said this so many times to you all, but I am just so excited to teach you this. I mean, every weekend I'm sometimes to 11, 12 o'clock at night, Friday, Saturday, Sunday. All I'm doing is sitting and building this course out. And all I can tell you is this is going to be so life changing for all of you. And then we're coming into the Trump era. And we know what happened last time in the Trump era. So we could really literally, you could be set up for a great 2025. Another thing that I have noticed in the last few years is it's more and more algo trading, which means it's more and more computer trading, all the way to where I would say 92 to 95% of the market is now calculation driven. If the market, in my sentiment, remember, this is not a fact, this is just what I assume from what I know and what I've been watching for years. If I have the assumption that the market is over 90% traded by computers, how does that work in our favor when we consider options or swings? And I want someone to come on and speak to me now. I want to hear one of your voices. Who's ready to speak? I see someone, Millen. Kevin! Let's get Kevin on.
Hey, Doug, how are you?
I'm doing well, sir. How are you?
Doing well. And what was the question again? I'm sorry.
No, of course not. Of course not. So, here's the question. I've been a day trader now for, oh God, it's going to be 10 and a half years since I started my day trading journey. And I've only ever been a day trader, the type that you see, and an options trader. And the options was something that I got a little bit of assistance on what options means. And then I wanted to create a pathway between my business understanding, my understanding of prints, and how we could bring that all together. Now, in the last 2 years, Kevin, I have truly noticed that most is now trading by computers. Why do I say that? How in the world would you see that magnitude of build by a human? It's just not possible. When you see something like this in OKLO, IONQ, do you really think there's humans in there who can create that?
Not at all. That's too much.
I actually love that answer. Not at all. So, Kevin, why, if my understanding is holds true, why do you think I absolutely love options now?
Because their
swings
calculations are going to be more precise with the computer rather than a person deciding when the run is over.
Exactly. Computers with access to unlimited resources are going to meet their calculation. Would you agree?
Yes.
Now, what's the beauty about a computer and what's the problem about a computer? Once it meets its calculation, does it need to do anything else?
No.
That's
All it has the liquidity to end the position. It's fine.
There you go. Perfect. So, how key then would you say is prints for a computer?
crucial because that's them either entering or getting out most of the time. I would feel like
Yeah, they're
on
basing
heavy prints.
100%. The variables are all based upon the prints. The prints would be the nucleus of a calculation or a formula, correct?
Yes, sir.
Exactly. So, do you like the ability of yourself now? Because I've seen you really grow so much, Kevin, and I see how much effort and work you're consistently putting in. Once you get to that stage of being a really good tape reader and computers are trading at this high magnitude, how do you like uh, the option strategy now based upon the prints?
I've been much better since the first options class. My percentages have went up. I would say almost 15 to 20%, and
Um,
I'm really tracking a lot more now too. A lot of different variables within my trades and things of that nature. But it's more. I'm more of a swing trader, so mine are more 2 to 5 days usually. Whenever I'm seeing the prints allowing for the pullback, and then taking something a little longer term,
okay.
and then playing it back to either prints if there's no volume, if the volume's not there when it gets back to the original buy, I get out then and then look to reposition or keep routing it through if there's more prints and volume to push.
Okay, which I love that, and I'm really happy to hear that your percentages are going up. But remember one thing: your typical swing or your typical options trader, and I'm talking 90% plus. Do you think they buy in the money or out the money?
Out of the money, it's the most return for what they're trying to
Well, no,
achieve.
no. The question is, don't base it upon what you've been taught by us, or what you've been taught here, and what you know yourself. If you didn't know anything else about Prince and anything that we do, you're going to buy in the money because your goal is you have no clue how far it can go because you can't read prints. But
Yes,
what
good enough
you're
point.
betting, yeah, you're going to do in the money because you are betting on the movement to carry on, and that's all you can do is you can take advantage of the momentum, but you have no clue where the price target is. I mean, you could sit there and say, "Oh, the buying's at 3; it should go to 4." But the reality is, because you don't know, do you know that the average options trade win is 12%? Did you know that?
Oh wow, that's really low compared to what I would have expected.
Well, let me ask you something. If you didn't know what prints were and what the targets were, and you were buying calls a week out at $4 or $5, does that actually make sense that you could only have a return of 20%? Yeah.
Yeah, because it can move really fast on the closer expirations
Yeah.
as well. You can be up 20 and then down 20 in 20 minutes.
So let's put it this way. The buying that I saw between 10 and 15 in IONQ is what laid my foundation for the 32 in January. Is there anybody else who would just do that to do that?
No, that's
Because they don't know.
not from that level. No, they
No,
would look to be buying more short term at, like you said, at the money or just a little bit out.
because they got no clue what's going on, do they? And if you looked at a chart between 10 and 15, that doesn't say much to you, but it says a lot to us tape readers. So the
Mm-hmm.
reality is, if you don't know prints, there's no way you can consistently get the type of returns we do. It's just not possible.
And I
If you
guess
don't have,
that was part of my question is how do you know when once we have this level of volume and you see that exceptional buying that provides for a really higher price target? How do you know when to enter on some of these positions? Because some of these may take a $5-10 pullback back to a previous high
100%, and it's a
before it
great
takes
question.
off. What do you look for, I guess, in your strategy to know when you're going to enter on some of these?
So I want to see first is consistency daily in volume and acquiring. So I know it's not fluff, and that starts bringing in short to mid to long. I want to see the consistent presence of acquiring, the consistent presence of market makers using any moment they can get to keep buying shares. That's building the foundation of where the company is going to go to. That's building a new valuation for the company. Now, if I see big volume day, Kevin, and the next day is just completely dropped off, great, someone liked it that day. But that does not mean it's going to carry momentum in the short term. Make sense?
Yes.
I want to see it carry momentum in the short term. I want it to meet those targets near and far at a very quicker pace. I want to see within that short term momentum consistency in new volume. I want that volume to be two, three, five times what it typically is shown. I want to see within that volume, there's always going to be new positions taken. I want to see that volume be as consistent when we're up two, three, 400% on a stock from where it started. Everything that you would need to see for it to hold true is what you need to see. So that's why staggering your, if you were doing options, staggering your contracts means that you're going to take advantage of those short term price targets, those mid-term price targets, and long term if they exist. So I want to see consistency daily. So, for instance, this one here that I just kept talking about today, uh, ARBE. Now you tell me, Mr. Kevin, what does that mean to you right now? Just look at it.
I was actually talking about this a little earlier. I had called 390 as the support for that one, where I would want to watch it to kind of see what you would look for a long-term entry.
Let me ask you something. Are you doing options or are you doing shares?
With that one, that was options. I was looking at options.
So let me ask you, it's under $5. Does it really matter?
Not with the buying that existed yesterday and today. No.
Do you think when they're acquiring between 390, let's just say you're 390 and 5, does it really matter to you where in that you start taking your options?
No, you're looking at like a $20 or $30 spread at most on that dollar move from 390 to 5 anyways on a $5 one.
And let me ask you another question. Did I tell you to take calls for next week or August?
No, August. Yes, it's the ones I was.
And why do you think I said August? Let's see who can get this one for me. Why August? What's the name of this company?
Robotics, I think.
Do you want to be the one that gets left crying over time decay, or do you want to be the one that gets to manage over time?
Gotcha. That makes sense, especially with the longer expiration there. The only thing that really kind of the only thing that looked different to me was at Ford. There was a massive bid prints that came in that were just blocked in 10 to 20 at a time. Or I think it was like 30 prints or so. Is that something that you would like to see for the play up as far as like a support level? Because that's how I interpreted it at the time. That's why I kind of looking at the 15-minute chart, 380 to 390 was where I was kind of expecting.
I only care for support levels when I'm day trading.
Gotcha.
And the only thing I call a support level in day trading, Kevin, as you know, is where the initial trigger came from to start the move would be my support, or where I saw a massive presence of a market maker, no matter where it was. But I don't look at support level just to say, oh yeah, it bounced off a number. That means nothing to me. I need to know why it did what it did. I need context. I don't care about content. I need context.
Gotcha.
I need to know why it's doing it. Because if I can know what they're doing, then that means I can follow. Can I follow what I don't know?
No.
Not possible, really, is it?
No.
So if you're looking at ARBE over the last 2 days, would you say today's volume would say, oh, that was just a one-time move, Doug, had a great volume one day, I'm not seeing anything today? Or are you seeing something starting to build?
No, it's still massive volume. We're looking at almost 60 million already today before noon. So
yeah. Now let me say, is that now formulating something that you have a keen interest in?
Yes, because it's continued to ask. It wasn't a single time trade and they're done with it. They're building for something bigger on the long term.
Now, what I will teach you all is how to look at. So look, if you looked at ACHR and said, oh, you're going to go to 50. No, it's not. It needs to trade so many shares just to move 50 cents or $1. So you've got to look at the outstanding shares available so you know what it takes to move it, which means you've got to have a close-knit tie to what the average daily range is. The daily range on low volume prior to it getting all this interest would clearly be a lot less, right? Than when it's got a lot more volume. It's going to have the ability to move more. So I would teach that also in the 7-point analysis. I have that broken down. But the thing you would see with this is it had nothing. Look at this. It was 5 million shares and less. You can't even see the volume for basically all of 2024. If you go back, look at this. So we look at it. Look at some of these days, Kevin. 550K.
Yeah, that's not
270K. That's nothing. And then out of nowhere, you see this area of build.
100 million after.
Yeah. But I'll tell you what's funny. Do you see this right here above 2? And if we looked at the volume on each of those, this went from trading 300,000-400,000, which is basically a doormat stock, to doing 3.5, 2.1, and then 8 million. And then the next one is 130 million. And you'd expect, how does it go from 200-300K to 5 million to 130 million? There's no way it's going to come right back. No, it could also be the leg up and start of a huge consolidation. Would you say we are in a consolidation, or it's definitely taking shape as a possible consolidation?
No, the volume's too heavy to be consolidation, I feel like, right now.
It would be consolidation.
Oh,
because look, between 5 and 350, look what it's doing.
Oh, yes. Now, I thought you meant just the overall compared to.
No. As in now, this is slowly starting to show that.
It's in a consolidation between 4 and 5, in my opinion, right now.
Yes, 100%. And do the prints and strategy agree with that theory?
Yes. And it's still high volume, which means the move is more likely sooner rather than later.
Beautiful. So this consolidation could be short-lived, and the move up could be a lot more near-term than long-term, correct?
Yes.
So if we're looking at taking calls for August and this consolidation, let's say, Kevin, it took 3 weeks before it decided it's going to make its move, calculated. So for this is we got 2 to 5. If it consolidated, let's just use what you said, 4 as between 4 and 5. And if it went from 2 to 5, what's that number? $3. So what's the calculated move of 4 then, Kevin?
8.
So if you're
4, I'm sorry, 7. I was
thinking you're right. No, you're right. It's 7. Okay. So if this moves to 7 and your options call is 750 for August, how are you looking?
Really good.
So am I worried about getting in 50 cents cheaper than this, or am I worried about, or do I buy enough time and know that my strike is right around the price target?
No, yeah, that you buy the time and then you can add to the position gradually if you really felt like it was going to be an issue.
100%.
As far as the volume dropping off.
And we got to use something that is no longer common, called common sense. And where do I get that from? After IONQ, did we not see QUBT and all of these other quantum computing stocks start taking shape?
Yes, they followed pretty much the same exact plan as IONQ did early.
So when you see a little cheapy company like this is getting 130 million shares trading in one day, and then subsequently doing 61 before 12, who was the first one that started it?
I'm sorry, what was that? Who was the first?
Which company in the robotic world started?
Oh, RGTI.
RGTI and ACHR.
I got you. I think of them more as an aviation stock with the.
Well, yeah, I see what you mean. But remember, what they're doing is the robotic taxis, robotic military equipment, and they signed the deal with United Airlines for robotic taxis. So we can see usually the first company in a segment is usually the one that is liked the most, expected to lead, expected to be on the forefront. You might have the RGTIs, QUBTs and that, but we saw that IONQ was the first one to gain traction. So how does this make our the ACHR not only stock, but that segment start looking like for us now that we're seeing ARBE come into play? And look, just how many times as we're speaking have you noticed 450 printing?
Mm-hmm. That's because we had 4 asks after that 4 bid. There was 4 short-term asks on like 4 or 5 prints, so that was kind of.
And I'm going to tell you something else, Kevin. I want you to look at the chat room. David, why do I feel like you've already taken a position? And I'm talking about Mr. David Torres. He's going to laugh.
I would expect David to have taken a position of this, to be honest.
Look in the chat. What did I tell you? I haven't even spoken to him. But is there any time to wait when you see a setup like this?
No.
Do you want to wait for it to release to 750?
No, because then you never know. That could be the top, and then it come back and build at 3 for 6 months to a year.
Exactly. So who are you in with at this point?
The market maker and what they're getting ready to do with the volume that they're presenting.
Exactly. That's exactly the way you got to see it. Okay, gotcha. Kevin, thank you very much. I appreciate you coming on.
Thank you, sir.
Absolutely. Okay, any other questions? We got 5 minutes left. Somehow these classes just go far too quick, but I doubt you want to hear my voice for more than an hour. So we got 5 minutes. Any other questions? Anybody want to come on? Please feel free to do it now. Okay, if not, that's it for today. We will be doing a lot more of these sessions until we get to the actual courses. Okay,
we have Tim.
Oh yeah, I just saw that. Okay, let Tim on.
Can you hear me all right?
Yep, I can hear you, Tim.
Right. Thank you. Quick one. Is price target and strike price always correlated? Like if you see, all right, we have shorter term intentions to hit 30, you'll have a strike price of 30, hoping that you can get there and still have enough time on your side to where time decay doesn't eat away at it?
Brilliant. Great question. So that's why you got to learn. And again, I will teach this, but basically I just express this to you is that's why you got to be able to have a ladder approach to how you play your options. So if you were saying, like you just said right now, let's make life a bit easier. Let's say we're just going to make this up. ACHR, you've done your calculations. You're like, right, it was in consolidation, Doug, it seemed like and looking at the volume for about a month, and then it moved $2. I think with what we're seeing now, Doug, I'll get to 15 in the next month. Now, here's the reality. Unfortunately, you're never going to get taught by me to buy less than 4 months. But if you were to say to yourself, I want to put 20% of my position 2 months out for a more favorable strike price because I've calculated that this type of consolidation, this type of volume patterns will move towards that target a lot sooner, and then I'll pay more for the 15, 4 months out, 6 months out, and take advantage of all the move past 15, or give myself enough time for it to meet 15, that's absolutely on you. I will tell you right now, I do not pay, and I call it my sweet spot, and this is tested by me, and I will be, again, teaching you all of this. My sweet spot for stocks is very simple. I do not buy contracts less than 4 months out. I don't care if I can see that the target will be in 2 weeks. I will pay more, but I never, ever pay more than $2.50 for a contract. That's my sweet spot. So again, type it in the room. Doug never buys contracts less than 4 months out, and I never pay more than $2.50 a contract. So you guys are fully aware. That's how I do mine. I will pay more, but you want to buy time, and you don't. Because we use prints, I will never ever buy in the money. I'm always out the money. So I'm not paying for $4 or $6 or $8 or $10 in the money. because I know what the prints need to do. Now, something that's going to be absolutely beautiful that you will all love is you're going to get the setups that require, and this is shown through the volume, a pullback. So if you've got a rangy stock, especially the tech ones, and they move and they got massive buying and they're moving in $6, $7, $8 ranges in a day. For instance, let's say, I'm just going to make this up. Let's say Amazon was at 240 and it made its way to 250 and it planted so much buying at 250. A stock in a company like that in that magnitude is going to have a pullback. It's going to use everything it can because it always has interest. Let me ask you something, and I've talked about this before. Let's say for that instance, and you're looking at Amazon right now, and it printed at 250 over a day or 2 days, 10 times, and it pulls back to 240. And we've decided that the price target for 250 is 275. Can you imagine that now you can buy the same strike as somebody would have bought it at 250 for significantly cheaper because you're entering on the pullback knowing what's up at 250? Who has the advantage? If you didn't understand that, let me explain that to you again. Sometimes in options, you're going to have, and a lot of times, we know we get pullbacks, and pullbacks are based upon the size of the buying at the top, or if it's a pull up, the size of the accumulated selling at the bottom. Now, if it was, for instance, Amazon, and it went to 250, and obviously we know Amazon's at 223, but I'm just using it as an example. And then at 250, we see market makers buying up millions of shares. Well, we know in a company like Amazon, which is established, which is clearly one of your unicorns, $1 trillion company, it's going nowhere. It can only go up. They are going to pull it back. They are going to use that to acquire more shares. So if you were at 250 and you looked at your strike prices and you said, right, this 250 has got a price target. And again, I'm just making this up. Let's make it easier. The 250 price target you said is $260. So when you looked at the options available 4 months out, when it was printing at 250, the 260 price target, strike was at $5 a contract. Then it pulls back because that's what we have planned for it to do. And let's say it pulled all the way back to 245, not 240, that's a bit low. Let's say 245. Now you looked at the price of the 260 strike 4 months out, and it's no longer $5. It's now 250. Who got the upper hand? Because you're going to pay 250 knowing it's going to go to 260. So by the time it gets to 250 again and trades back up to that same area of buying, what happens automatically to the value of your options contracts? The premium jumps. You're already up sometimes 100%. And it hasn't even made the move. It's because you base it on the prints. You entered on the pullback of the build. Before it even moved past the area of build, you're up 100%. Who likes that? Put in a room, I like that. I want to learn that. I need to know that. This is going to help me change my stars. This is going to help me take care of my family. This is going to give me security because that's what this can do. And this is what it's done for me. This is what it's done for David. This is what it's doing for Millen. That's why you need to learn it, but I can't make you learn it. I can only teach you exactly how it's done. So there's so many opportunities for you guys to do so well with options and swings or whatever tool that you use. But as I've told you, mine is more based upon options, but you can use what instrument you can. So with that being said, we are now past 12 o'clock. It's been a lovely session. Hope you guys all enjoyed and learned some stuff. And we're going to be continuing this. We might do another one on Thursday, but you're going to be getting a lot of these options conversations with me, getting you all warmed up, set up, and ready for a brilliant course that's coming next month. Let's all enjoy our afternoons, and I'll talk to you in the room.